Welcome to the second session of chapter 3. In this session, we'll be doing some practical problems. So let's go straight to question number 5. Let me read out the question. A, B and C are partners sharing profits in the ratio of 3:2:1 respectively. From 1st April 2014, they decided to share profits in the ratio of 2:3:1. The partnership deed provides that in the event of any change in profit sharing ratio, the goodwill should be valued at 3 years purchase of the average of 5 years profits. The profits and losses of the preceding 5 years are profit 72,000, 1,80,000, 2,04,000, 2,28,000, loss 84,000. Showing the working clearly, give the necessary journal entries to record the above change. So, A, B and C are partners. They were sharing profits and losses in the ratio of 3:2:1. So the partnership states that in the event of any change, 5 years purchases average profit has to be taken into account for calculation of goodwill. So they have also decided that their new profit sharing ratio has to be in the ratio of 2:3:1 and not 3:1:2. So let's see here. Valuation of goodwill. Average goodwill, that is 72,000, 1,80,000, 2,44,000, 2,28,000 minus 84,000. We are deducting this 84,000 because there was a loss. So it comes to 6 lakhs divided by 5, where the value of where the average profit is 1,20,000 for 5 years. So the value of goodwill comes to 1,20,000 into 3. That means the average profit multiplied by number of years purchase. That is 3 years purchase. So the value of goodwill is 3,60,000. Calculation of gain or sacrificing ratio. We will have to calculate, after calculation of the value of goodwill, finding out the value of goodwill, we will have to calculate who is the sacrificing partner and who is the gaining partner. Then we will have to distribute the goodwill accordingly. So this is the old ratio of partner A, that is 3/6, minus new ratio, that is 2/6. You will get 1/6. 1/6, and B has old ratio of 2/6 and new ratio 3/6. 2/6 minus 3/6, you will get 1/6. This is minus 1/6, but in accountancy we ignore minus sign, but this indicates that this is a gaining partner. So A is a sacrificing partner. As for C, 1/6 minus 1/6, 0. There is no sacrifice and there is no gain. That means C has no gain, no loss. No gain, no loss. Whereas A is a sacrificing partner and B is a gaining partner. So this is used to find out how the gaining partner has to compensate the sacrificing partner. So compensation payable by B to A by gaining partner to sacrificing partner, in other words. So this is the value of goodwill, 3,60,000 into 1/6, 60,000. So B has to give 60,000 to A for the sacrifices that A has made to B. So we will have to journalize this one. That is journal, date, particulars, ledger folio, debtor, creditor. So B's capital account, debtor, to A's capital account. That is 60,000. That means the narration will be being the adjustment of goodwill. That means being the adjustment of goodwill means the adjustment has been made where B has to compensate A. This 60,000 is paid by B to A. So when you value the goodwill under change in the profit sharing ratio, average goodwill have to be found out, then value of goodwill. After that, you will have to see who is the gaining partner and who is the sacrificing partner. Then the sacrificing partner has to get certain amount from gaining partner. This is very easy. Next is, we'll go to question number 6. Listen carefully. This question number 6 is very easy. At the same time, if you are able to understand this question, it will be easy for the rest of the problems. So let me read out the question. X, Y and Z, who are presently sharing profits and losses in the ratio of 5:3:2, decide to share future profit and losses in the ratio of 2:3:5 with effect from 1st April 2014. An extract of their balance sheet as at 31st March 2014 is as follows. On the liability side, you have sundry creditors, outstanding rent. On the asset side, you have land and building, plant and machinery, stock, debtors, less provision, and it is additional information is given. That is number 1. We have land and building be valued at 1,71,000. Plant and machinery be depreciated by 15%. Stock is found overvalued by 22,800. Provision for doubtful debts is to be made equal to 5% of the debtors. An item of 18,000 included in sundry creditors is not likely to be claimed. Rent of 2,400 still outstanding out of the amount of insurance which was debited entirely to profit and loss account. Rupees 3,000 be carried forward as an expired insurance. Out of the total commission received, rupees 1,800 is to be treated as advance commission. This amount was earlier credited to profit and loss account. An unaccounted accrued income of rupees 600 be provided for. A debtor whose dues of rupees 3,000 were written off as bad debts paid 80% in full settlement. That means you are here required to pass the necessary journal entries and prepare revaluation account. So when you prepare these journal entries and revaluation account, you will have to first compare the value of assets and liabilities from that of given in the balance sheet with additional information. Then you will have to ascertain first whether there is an increase or decrease in the value of assets and liabilities. Then you will have to journalize. After journalizing, you will have to draw a revaluation account depending upon the debit and credit that you have entered in the journal. So let's see here. Land and building. That is, land and building be valued at 1,71,000. But the land and building value in your balance sheet is 1,50,000. That means there is an increase in the value of assets where it is 21,000. So land and building account chapter to revaluation account, that is 21,000. That is increase in the value of land and building. Revaluation account chapter to plant and machinery, that is 9,000. That means plant and machinery be depreciated, decreased by 15%, depreciated. So when you calculate 15% of 60,000, then you get 9,000. Therefore, this is a decrease. The revaluation account chapter to plant and machinery account, 9,000 has been decreased. Revaluation account chapter to stock, that is 22,800. It has been overvalued by 22,800. Actually, the stock value is 48,000, but it was overvalued by 22,800. It was increased, overvalued. Okay, so there is a decrease in the value of stock. If it is overvalued, when we draw the balance sheet, it has to be decreased. So it is overvalued by 22,800 once again. Okay. Next is revaluation account chapter to provision for doubtful debts. Doubtful debts has been decreased. That means the debtor whose dues of 3,000 were written off as bad debts paid 80% in full settlement. It was settled already, 3,000. That means 9,000 minus 6,000, it is 3,000. creditors account debtor to revaluation account. That means being decreased in the amount of creditors recorded. There is decrease in the value of creditors. Before we go to next page, if when you do the journal for this problem, you can also club all the decrease in the value of assets together or increase in the value of assets together, and also you can also club the increase in the value of liabilities and decrease in the value of liabilities separately. So you individually you can also enter like this. At the same time, you can also club all these transactions together. Next page. We have revaluation accounted to the outstanding rent. That is outstanding rent 2,400. So rent of 2,400 is still outstanding. That is an increase in the value of liabilities. So it is yet to be paid. Therefore, this is revaluation account debtor to outstanding rent. Next is prepaid insurance to revaluation account. That means prepaid insurance. Insurance was already paid, and it was decided that it will be carried forward in the next year, next financial year. Therefore, it is recorded as prepaid insurance. Revaluation account debtor to commission received. That means accrued. It has been already received in advance. 1,800. Advance receipt of commission. Accrued income to revaluation account 600. This is also an income that has been already accrued. Okay, it is already earned, but it is not received. Bad debts recorded to revaluation account 2,400. Revaluation account debtor to A's capital to B's capital to C's capital. Actually, this amount will not come here as of now. There will not be journal before you prepare revaluation account. So you will have to prepare revaluation account to get whether there is profit or loss. So after ascertaining the profit and loss, you will have to prepare revaluation account and then distribute this amount to the partner's capital account. So in this problem, 6,000 is your profit, and then if it is distributed among the partners in the ratio of 5:3:2, then you will get 1,800 and 1,000. I'm sorry, this is supposed to be 3,000 for A. For B it is 1,800, and for C it is 1,200. So this is how the net profit has to be distributed among the partners. I'll show you this. This is the net profit. So the profit sharing ratio of A, B, and C is 3:2. This is the profit sharing ratio for A, B, and C. This is the net profit. So if this net profit is distributed among the partners in the ratio of 5:3:2, then it is for A 6,000 into 5 divided by 10. 10 means 5 plus 3 plus 2 is equal to 10. So this is the ratio for A. So you will get 3,000. And also for B, it is 6,000 into 3 by 10. You will get 1,800. So for C, it will be 6,000 into 2 by 10. You will get 1,200. So this is how the net profit of the firm is distributed. But this journal will never come unless and until you prepare revaluation account. So out of revaluation account, you will get the net profit. So here, under revaluation account, this revaluation account, once you finish the journal, it is very easy to be prepared. That means we have here 4 columns, that is particulars column, rupees, particulars, then rupees. Then on the left side it is debit, and on the right side it is credit. So here, first particular is by land and building, that is 21,000, that we have already journalized. And also we have by sundry creditors 18,000, by prepaid insurance 3,000, by accrued income 600, and by bad debts recovered, that is 2,400. This is a credit side. And on the debit side, you have to stock 22,800, do provision for doubtful debts, that is 3,000, to plant and machinery 9,000, to outstanding rent 2,400, to commission received in advance 1,800, to profit on revaluation transferred to partners capital account, that is 6,000. The 6,000 is distributed in the ratio of 5:3:2 among partner A, B, and C. So this is how you get. When you look at the overall calculation of this revaluation, preparation and calculation, you will come across this is an income or gain. So income or gain minus expenses and losses, then you will get a profit. Because there is a shortage of 6,000 on the debit side. So there is a profit of 6,000 which has to be given to the all partners in an all ratio. So in this problem, you will have to ascertain first in an additional information. You will have to ascertain whether there is increase or decrease in the assets and liabilities. And you will have to also understand the cushions, the particulars, and which side this particular transaction has to go, whether it is on the asset side or whether it is on the debit side. So, unless and until you prepare this revaluation account, you will not be able to find out net profit and loss. So, revaluation account is a must. It is a must to be prepared to distribute the profit and losses among the partners of the partnership firm. So with this, we have come to the end of this session, and in the next session we will do some of the practical problems. Thank you.